I'm going to explain what happened to SVB Financial Group, the former parent company of Silicon Valley Bank, which filed for Chapter 11 bankruptcy protection last week. If you're not familiar with Silicon Valley Bank, it was one of the largest banks in the US that focused on serving technology startups and venture capital. It had over 200 billion assets and more than 3,000 employees. It was also known for its innovative products and services, such as offering loans based on intellectual property rather than collateral. But things went downhill for Silicon Valley Bank when interest rates started to rise in late 2022. The bank had a lot of long-term loans that were fixed at low rate, while its deposits were mostly short-term and variable. This created a mismatch between its assets and its liabilities, which squeezed its net interest margin and profitability. As interest rates continued to climb, Silicon Valley Bank faced increasing pressure from its depositors who wanted higher returns or withdrew their money altogether. The bank also faced regulatory scrutiny from its risky lending practices and lack of capital reserve. By March 2023, Silicon Valley Bank was insolvent and unable to meet its obligation. On March 10, 2023, regulators shut down Silicon Valley Bank and placed it under the control of the FDIC. The FDIC guaranteed all deposits at the bank and renamed it Silicon Valley Bridge Bank. The FDIC also started looking for a buyer for its bank assets and liability. But what about SVB Financial Group, the holding company that owns Silicon Valley Bank? Well, SVB Financial Group was not part of the FDIC takeover. Instead, it filed for Chapter 11 bankruptcy protection on March 17, 2023 in New York. Chapter 11 bankruptcy is a legal process that allows a company to reorganize its debts and assets under court supervision. It gives the company a chance to negotiate with its creditors and find new sources of funding or buyers for its businesses. SVB Financial Group said it had around $2.2 billion in liquidity, $3.3 billion in bond debt, and $3.7 billion in preferred stock. It also said it would seek new owners for its other units that were not affected by the bank closure, SVB Capital and SVB Security. However, SVB Financial Group could face some challenges during this bankruptcy process. For one thing, it could face lawsuits from shareholders who claim that it misled them about the risk of rising interest rates on its business model. For another thing, it could face claims from the FDIC, who may want to recover some losses from selling Silicon Valley Bridge Bank. So what does it mean for you? Well, if you were a depositor at Silicon Valley Bank or Bridge Bank, you don't have to worry about losing your money because your deposits are insured by the FDIC up to $250,000 per account. If you are an investor at SVB Financial Group's bonds or stock, you may have to wait until the bankruptcy process is over to see how much you can recover from your investment. And if you are a customer or partner of SVB Capital or SVB Securities, you may have to deal with some uncertainty until they find new owners or partners. That's all for today's video. I hope you learned something new about SVB Financial Group's bankruptcy filing.